Well, Asian markets, they have opened up higher today following a strong handover from Wall Street. So all those Asian markets, they opened up in the green. But if you're taking a closer look at it, some of those markets have come off a tad bit from the top. So the Nikkei was holding with a gain. That's come off a tad bit. Keep in mind the dollar yen, in fact, has weakened from around that 108.5 or moving towards 109. Now, that'll be good for an export-oriented economy, so let's keep an eye out on that one. But the other couple of markets as well, the Kospi was up 0.2% just a short while back. That's come off the high point of the day. It's, in fact, is as flat as can be. And you pull up both the other two markets, the Straits and the Taiwanese index, they come up for you on the screen as flat as can be. Only the Taiwanese index, for now at least, it's holding with a bit of a gain of around 0.5%. The SGX Nifty, though, is suggesting that we're likely to start off with a gain of around 20 to around 25 points out.
All right, let's move on to the U.S. markets. Then on Wall Street, the markets ended higher for the second consecutive session, boosted by positive earnings from financial institutions such as Goldman Sachs and Bank of America. The Dow rose 140 points. The S&P also gained around 0.2%, while the Nasdaq Composite, that climbed around 0.1%. CNBC's Josh Lipton gets us a wrap of all the action on Wall Street.
U.S. stocks finishing higher again. The Dow adding 141 points, the S&P up 5, and the Nasdaq gaining 10. The Fed's Beige Book, a snapshot of the economy, shows the economic outlook remains positive. 8 of 12 districts saw modest to moderate growth as the new year began. The report also finds optimism is waning among businesses over rising concerns about stock market volatility, rising borrowing costs, falling energy prices, and trade, and the government shutdown. Meanwhile, U.S. import prices fell for a second straight month in December. The Labor Department report bolstering economists' expectations of a pause in interest rate hikes from the Federal Reserve in the near term. And finally, Sears has reached a deal with Chairman Eddie Lampert to save the company from bankruptcy. The deal is valued at roughly $5 billion, according to a person familiar with this situation, and will keep the company and roughly 400 stores in operation. That's the action from the U.S. market. Now back to you in Mumbai.
Well, let's get in some opinion on the U.S. market and growth prospects for the U.S. market from Jamie Dimon and Larry Fink.
What I was referring to was an economist who said if it lasts for the whole quarter, it could reverse the growth of the quarter, which might have been 2 to 2.5. It could be 0. And I don't know that. It's really hard to figure out what the shutdown does to the economy. And also, there'll be a little bit of a bounce back after that. So that's just the effect in the quarter. Remember, a lot of these people are not being paid, are going to be paid. They're just going to be paid kind of late and painfully.
We believe over the next 10 years, equity markets are going to be higher, but we are going to see those types of swings. Now, we all know the fourth quarter was a pretty severe downdraft in the equity markets, and that reflects in our NAV. But we had organic growth, unlike the majority of the industry, right. and we are. And let me just say one thing: what I think is really differentiating us, and also I think it's changing the whole composition of the markets. We're seeing in the wealth and the retail side, investors move away from stock picking, moving away from buying a product to working on models and really now portfolio composition.
Well, Europe's where the action is, and after the Brexit vote defeat, Theresa May survives a vote of no confidence. Now, the House of Commons voted to defeat the motion raised by the leader of the main opposition Labour Party, Jeremy Corbyn, by 325 votes to 306. CNBC's William Marks reports with the developments on that front.
Theresa May pulled off a narrow political escape Wednesday evening and survives to fight on as an increasingly beleaguered British leader. The attempt to topple her government was an almost inevitable consequence of Tuesday's crushing defeat, when scores of her own Conservative MPs voted alongside their political opponents to repudiate the withdrawal agreement the Prime Minister's team had negotiated with Europe. The marginal victory in the confidence vote was only possible thanks to what's known as a supply and confidence deal with the small Northern Irish party, the Democratic Unionists. Without their 10 votes, May would have lost, and their leader rushed to highlight that harsh reality. May's promised to meet with her political enemies to discuss what could constitute a Brexit consensus, but her opponents have insisted they'll only attend such meetings with strings attached, strings that could swiftly tie Theresa May in another Brexit Gordian knot. The Prime Minister has always insisted the threat of no deal is a necessary form of leverage during any negotiations with Brussels, But Labour leader Jeremy Corbyn said cross-party talks would not continue if that option remained on the table.
Before there can be any positive discussions about the way forward, the government must remove clearly, once and for all, the prospect of the catastrophe of a no-deal Brexit from the EU and all the chaos that would come as a result of that. And I invite the Prime Minister to confirm now that the government will not countenance a no-deal Brexit from the European Union.
Meanwhile, May's chief Scottish critic in Westminster has insisted that a second referendum must be one of several items on any Brexit-related menu. The Prime Minister has, if nothing else, won a few more days of breathing space, at least until next Monday, when she must return to the House of Commons with a workable Plan B that could have some chance of winning majority support.
If you look at how the pound has reacted to what's taken place over the last couple of weeks, it really hasn't moved all that much. That suggests the outcome that we had was more or less priced in. No one was really counting on a hard Brexit, and that risk is probably diminished. I think the key thing for UK assets at this point is not so much what the outcome is at this point. All the different versions of Brexit or a soft Brexit, they're not radically different one from the other in terms of their economic impact on the UK. The real issue for sterling and therefore equities is when is the uncertainty finally going to go away? When are we going to know which of those options the UK is actually going to move towards? And whether that's in the next 2 months or whether it's in the next 6 months, really no one can say. So the fundamental issue is the reduction of the uncertainty as opposed to the actual outcome at this point.
Well, in yesterday's trading session, most European markets, they ended higher, apart from the UK market, as it awaited a no-confidence vote in the UK government led by Theresa May. Now, on the data front, Britain's inflation rate fell to its lowest levels we've seen in nearly 2 years in December. The consumer prices, though, rose at an annual pace of 2.1% in December, slipped from around the 2.3% recorded in the month of November.
And in the currency space, dollar index edges higher as Brexit uncertainties pressured the safe haven yen. Meanwhile, pound rises on hopes of soft Brexit.
And in the world of commodities, then crude oil prices rise, though worries about the global economy and forecast of swelling US production weigh on sentiment. For the time being, Brent holding about the $61 per barrel.